The next question I ask is, what is your financial and tax situation? Are you in a high income bracket or otherwise need to limit how much money you personally take in? The corporation is the only entity that can help you with that directly. You can take your corporation and by using it wisely, live well without having a lot of personal income to account for. For example, the owner of Zappos shoes, he's a billionaire, but his annual salary is $35,000 a year. That's how much Zappos shoes pays him as the CEO of the corporation. And yet, he's living life large because he doesn't need that other income. He's a shareholder. He has all these other ways of getting the money. On the other hand, if you are a small startup or a home-based business, maybe you're contributing money to the business, both at startup and periodically through the year. So, or maybe you just need more tax deductions. In that instance, you're going to be wanting to use a hybrid company structure like the S Corp or an LLC, preferably electing as an S Corp. Those two can help you. The corporation wouldn't help you at all. The next question is, who are the parties that are forming the corporation? For example, will all the owners of the company be U.S. citizens? If not, you can't use the S Corp because one of the qualifications of setting up an S Corp is that all of the owners are U.S. citizens and there's only 75 or less shareholders and there's only one class of stock. So if everybody won't fit into that category, you can't use the S Corporation status. At the same time, if you're an adult and maybe you're forming a business with your kids or other relatives that are going to benefit from the business but not be actively involved in running it, a limited partnership is a really good option because you're taking all the risk, you're doing all the day-to-day control, and you don't really want them to have any control. They're not going to be running it, and if they're your kids, they're probably not even going to really be putting any money into it. So you want to then have that be a limited partnership. And you can set that up as a limited partnership and even have yourself as the general partner, maybe even own 1% or 2% of the company, so that even though you're taking all the risk, if you get sued, there's not much ownership there for people to go after. All of the ownership is in the limited partners. Maybe there'll be more than one owner and all of you will be working together as in a partnership. Well, then you want to have a corporation or S Corp or LLC, right? Depending on how much flexibility you need. So, is this the first or only business each owner will have? That's another thing you want to know. So, if it's not, what type of business structure is the other companies using, and how large is their share of ownership in each business? Because if you have a partner and they own a company over here where they own 100% of the shares, and then they come in your company and they own 25% of the shares, that's okay. But if they own 50% of the shares, you might find yourself, unless there's a number of other people in that company, you might find yourself being lumped into a tax situation with the two companies if they own, more than 50%. So those are different things you want to look at in terms of choosing how the business structure what the business structure will be, is who is going to be in the company and what are their responsibilities and risks. The next question that I ask people is, what type of work will the company be doing? Because certain types of work are taxed at higher levels within the corporate structure. So if you're a professional, an attorney, accountant, a consultant, or a personal service corporation, they all get taxed higher. So then you need to file for the S Corp election so that you're taxed at your personal rates rather than the higher corporate rates. If you're using your business for real estate, LLCs are usually a good idea for these business types because it allows the most flexibility. One way to do that is either elect as an S Corp or to set up an S Corp and have all of the LLCs be disregarded entities, which means they'll be taxed as a sole proprietorship where all of the taxes flow through the owner, and then the owner can be an S corporation. One of the things I would stay away from doing real estate, though, is a regular corporation because of the capital gains tax that you would then be stuck having to pay each time you brought a solar property. The next thing I ask people is, what is their personality type? Are you laid back and informal? Are you organized? You're somewhere in between? This is important because if you have a corporation, maintaining the corporate formalities requires a bit of discipline and organization. And if you don't take care of those things, then you can find yourself in a situation where your assets could be compromised. As I talked about earlier with piercing the corporate veil, not dealing with those formalities will make it easier for that to happen. The S Corp is a little less formal, but it still requires that basic compliance. Limited liability companies, on the other hand, can be very informal and unstructured if that's how the owners want it. Now, I certainly recommend extremely highly that you have a written operating agreement so everybody's on the same page. But in terms of the regular formalities of a corporation where you have to deal with shareholder meetings and board meetings and minutes, those are not required by law. So it gives you a lot more flexibility. Next, I say, where will you be forming your entity? And that's important because entities are formed in the states, and different states have different rules. Generally speaking, unless you're forming a corporation you intend to become a big deal or have some very specific reasons why you want to do otherwise, where you live and have your business is the best place to form your business structure. But that being said, there are different rules and costs associated with the various entity types in different states. So for example, here in New York, it costs more to file an LLC than a corporation, both in terms of filing fees and in the need to publish it in the local newspaper for 6 weeks. Also, New York does not recognize the S Corp, so unlike many states, you have to file an actual state corporate tax return for your S Corp instead of just filing it with your regular personal taxes on the state level. But I still recommend the S Corp because the majority of the benefits it offers are at the federal level, and you file the losses and deductions with your personal taxes on the federal level. So it's still worthwhile. In fact, for many new businesses, right, especially those starting a home-based or internet business or maintaining their day job while they're getting their new business venture off the ground, the S Corp or the LLC electing as an S Corp can be a lot like that water dragon has been for my son. Flexible enough to get you through the growing pains of your new business, but sturdy enough to take you to the big leagues. And so I do recommend it. If you're in California, the LLC requires you to pay an annual fee, maintenance fee, whether you make money or not. If you're going to grow a big, huge company that you plan to, even though you're starting it at home, you plan to take public at some point, then I would maybe think about forming it in Delaware, because Delaware has the best laws for large corporations inside of the United States. So those are the kinds of things that you really need to take a look at as you're trying to form your structure. Okay, so we covered a lot of material today, and we just want to review. We discussed that there are several business structures that can be used to help you grow your business, right? Including traditional and S corporations, LLCs, and limited partnerships, and that you should avoid the use of both general partnerships and sole proprietorships because they can be dangerous to your financial health. We talked about the pros and cons of each type of structure and how they can save you money and reduce your tax liability and protect your assets when used properly. And we looked at some factors that can help you determine which entity would most likely suit you best, including reviewing your risk exposure, your tax liabilities, your personality, and other things. So I tried to cover a lot of information here to help you get your business in the right business structure, where your business is now. I hope you've gotten some useful help out of this. Unfortunately, we've come to the end of our time together. I know that was a lot of material, So I've put together a little handout, and if you'd like, you can put your name and email address in the little box that'll come up under this, and I'll send you a copy of the handout so that you can use it for review, along with a subscription to my Business E-Tips online newsletter. I also have a corporate primer that really goes into more detail about each of these business structures and selecting them and the pros and cons of them, available for $10 at my website at www.homebizcoachonline.com. I hope you guys found this helpful. I hope you enjoyed the talk, and I'll be doing another talk on the 1st of March covering the topic writing an effective business plan for your home-based business. So you can get more information in your handout if you sign up here or by visiting my blog again at homebizcoachonline.com. So that's a wrap for this session. Thank you very much for listening, and we'll talk again soon.